panelist, Sophie, who's probably looking for the building like everyone is struggling. But later I apologize. Okay, very good morning. My name is Francesco Rampa from the European Center for Development Policy Management, ECDPM, and we are very glad with SMV. And we have to be grateful to the Food Systems Pavilion for this side event. We'll be talking about building local ecosystems conducive to food systems adaptation finance. Crucial topic. Yesterday was a food day, but you know, a lot of pledges, a lot of announcements with a leader's declaration for the first time on food and climate, but we here today, we need to talk about implementation. Pledges aren't enough. So let me first ask Harko Kostner from SMV to kick off with some remarks, and then we'll pass to our fantastic panel. Please, Harko.
Thank you very much. So the last days we have been hearing a lot about the need of mobilizing finance to food systems. I think there's an overall recognition of both the opportunity that food systems bring to adaptation and mitigation, but also the contribution that food systems bring to greenhouse gas emissions. So we are all, I think, convinced that we need to change, but for that change, we need to transform our current food system, and that begins with the farmer. What we see is that agriculture is being seen as a risk, and that from a total finance, only 4% of the finance is going currently to agriculture. If you look to climate finance, that is less than 3%. And if you really look down what is really going to the small scale farmers, you are somewhere in 0.0 blah, 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 blah. I don't know exact number, but I've heard it these weeks, but it is really so little that it's not worth even remembering. So I think what we want to discuss about is really how can we bring and mobilize funding for this food systems transformation, and also not just keep in mind, okay, what are the incentives for the financial sector and investors, but also what are the incentives for the farmers. Thank you very much.
Thanks, Arco. Welcome everyone again, including our friends online. Those from places where it's very early or very late, depending where you are in the world. We know there are some, maybe Europe and Africa, some of them at 6:30 in the morning, but thanks for joining us. We have a great panel. And let me ask a question to all of them, the same question. Exactly what are the obstacles today to public-private partnerships? The amount of resources needed for the adjustments and the improvements Arco was talking about require both public and private finance. These need to be combined and coordinated. So I'll be asking all of our great panelists what are, in their views, currently the obstacles to public and private finance. And we start with Vandana Totoli, who's a business development advisor at a very apparently successful exercise to do public-private partnership, the Dutch Fund for Climate and Development. Vandana, please. What is your experience?
Thank you. So yes, my name is Vandana, and I am with the Dutch Fund for Climate and Development. The fund is an adaptation fund that is focusing on landscapes and vulnerable communities in Asia and Africa and Latin America. And I'm part of SNV, Netherlands Development Organization, one of the consortium partners on the DFCD program. The other partners are, of course, FMO, the Dutch Entrepreneurial Development Bank. We have Climate Fund Managers and WWF Netherlands. So when we talk about adaptation to food systems, we are largely talking about SMEs, right? Like in terms of, at the local level, what are the organizations that are involved in food systems. So we are looking at driving investments into these local SMEs and even through financial institutions and support systems there. Now, the barriers when it comes to reaching these food systems actors through investments like DFCD, for example, is on many fronts, in many ways, it's quite, let's say, there are quite a few challenges. And one of the primary ones is even the lack of awareness on what kind of climate risks exists out there and how is it affecting their own businesses, for instance. SNV has been working in around 33 projects, I think, and with some 300 SMEs in different projects in different countries across Asia and Africa. And one simple example would be about in Kenya, where I'm based, there is a company that is into green beans exports into Netherlands. Now, green beans, in Kenya, the season is, let's say, January to March is summer time, and it's quite hot and dry, and there's not enough produce coming into the market. Whereas that coincides with the winter season in Netherlands, for instance, and that is the peak demand time. And the companies that are trying to export to the Netherlands miss out on the profitability during that time is because they're not able to get enough produce from the market. It's practically dry, and what companies do is instead of then trying to build the resilience of the smallholder farmers in improving on-farm water productivity, they try to just expand the number of farmers that they reach. So instead of going to 50,000 farmers, they'll go to 80,000 farmers, try these things. So the different adaptation capabilities, like to come up with these different projects also, the companies and the systems actors need to understand how the climate risks are affecting their individual businesses, and that is clearly lacking. That is just one example. Of course, then I would also look at there are different technologies out in the market that are really exciting for these systems actors to adopt. And we, through NGO partners and programs, sometimes get a lot of farmers and everybody excited about the technology, and then the technology is not available in the local area, right? It is not at the doorstep of the farmers, it's not at the doorstep of these companies, and that is, again, a big a gap. Like, how do you get those beautiful technologies being developed in R&D in labs to the farmers or to the other food system actors, including agribusinesses and so on. So let me give a chance. I think if I can list out all the points, but I feel like I might be hogging the mic a bit too long, so let me.
Fantastic. We'll have a chance to get back to the examples and also through the question from the audience later, but let me turn now to, of course, the center of what we are discussing here, local adaptation finance, and the center of it is farmers. So we are also delighted to have with us Elizabeth Nzimadala, who is the president of the Eastern African Farmers Federation. So Elizabeth, how do you see the obstacles to getting food systems finance for local adaptation? Where do we stand today?
Yeah, thank you so much, Francesco. It's really a great pleasure for me to be part of this discussion, but also to bring in the farmer's perspective, especially when it comes to adaptation financing. And right from the opening remarks, we heard that farmers are accessing little when it comes to adaptation financing. Actually, 0.3% is what farmers are able to access. There are so many obstacles, and one of them is really the issue of capacity. The capacity to understand the different financial instruments, the availability of funds, understanding where the fund is, but also capacity in terms of having clarity when it comes to us as smallholder farmers in terms of what kind of investments do we want. I think our experience as the Eastern African Farmers Federation has really shown that as farmers, we also need to build our internal capacity in terms of understanding some of these processes, like, for example, the COP process. For so many years, we've been participating in these processes, but without, diving deep into understanding how, the processes are. Not until 2 years ago, before Sharm el-Sheikh, when we really put climate issues at the center of our action as an organization. We had to invest a lot in terms of our membership, being able to understand the entire process. We held consultations. We had our call to action for Sharm el-Sheikh. But also after Sharm el-Sheikh, we had meetings to really unpack what the decisions were on agriculture, on climate financing, on adaptation. And then it really helped us to also come up with a roadmap to COP28. But also, we positioned ourselves in a way that we are able to engage with, high-level discussions that are ongoing. For example, we've been part of the reference group for food systems that put together the Emirates Declaration that we are talking about, and that's why, actually, even on the first day, I was the one giving a keynote address at the official launch of the declaration. So what does that mean? That as farmers, we really need to be at the center of the discussions and to be engaged, because for so long we've been neglected by so many actors. And there's so many intermediaries that have occupied our space, including research, including civil society, the NGOs, even our government. They have really occupied that space that would have occupied as farmers. So everyone is speaking about farmers, bringing farmers at the center, but when it comes to climate financing, that money does not really reach the farmer because of those so many intermediaries. And then the second barrier is also agriculture in general and food systems being looked at as risky. And it's very true. Because when you look at, for example, coming from Eastern Africa region and the whole of Africa, the sector is not cushioned at all. It faces the biggest brunt of climate change, and especially we as smallholder farmers. And the reason is because our governments have not really respected the policies which they make themselves. For over 20 years now, since Malabo Declaration, our government's committed to allocate 10% of their national budgets to the agriculture sector. But we have very few, if any, and if any is because if we are really to hold each government accountable in terms of where that money they say they are allocating to the sector goes, then you realize that also little is accessed at the farm level where action is supposed to take place. So the lack of investment in the agriculture sector does not attract the required public and private investments into the sector because it's very risky. And so it becomes as a barrier because everyone is seeing our governments as if they are not serious, as if they are not prioritizing issues of food transformation. Because if they were, giving it the attention that it deserves, then there is no reason why a government, for example, would invest a lot of money in Ministry of Security, for example, to guard your borders when actually your people are dying of hunger and malnutrition. I think, issues of food should be a priority for all the national governments. I'll be coming back with some other points, maybe.
No, absolutely. We have a second round of questions when we look at the solutions, and here we now try to collect first the multi-stakeholder view on what the problems are. And I thought this point that you mentioned about intermediaries is very interesting because when we talk about food and markets, we always hear the problem there are middlemen in terms of actual management of the goods and the produce. But it's interesting here you're talking about even another type of middlemen, including ourselves, who want to support the farmers but act a bit in between the finance and the farmer. And that is an important obstacle. And I would like to hear from Petronelle Bogard, who is also another key actor in this space because she's the global head for agriculture and agribusiness at the FMO, the Dutch Development Bank. And they have important levels of finance coming from Europe, but they want to reach, of course, the beneficiaries on the ground, for example, in Africa. So is that an obstacle? How do you deal with this issue of intermediating between the finance and the farmer. Please, Peter.
Indeed, that's if we look at the food system and what was mentioned, the 30% contribution, negative contribution to emissions of the agricultural sector, a big part, and you can find the actual numbers on the FAO side, is caused actually by the use of fossil fuels. Transportation, but also the diesel used in the field. So if we really phase out fossil fuels, that will also help the contribution of the agricultural sector. That's one. The other thing is, of course, we also need to change agricultural practices with smallholders, but also with the large companies. And then we're talking mostly about Latin America, because there are smallholder farms there as well, but there's also quite a number of large farms, millions of hectares. And what we try to do is to stimulate the companies that are willing and able to move to more regenerative agricultural practices so that it's better for soils, but also less emissions. That's one part. The difficult part is how do we reach the 300 or 500 million smallholder farms, and especially in Africa. That's a challenge for us. What we have several ways to reach them because we don't have a retail bank in Africa that can enable farmers to access finance. What we try to do is use local banks to stimulate local banks, as you rightfully pointed out. Local banks, before we were aware of climate change, were already reluctant to finance the agricultural sector, but today it's even worse. So what we try to do is de-risk those banks by providing guarantees to stimulate them to do more for smallholder and medium-sized companies. And that is facilitated by the EU. So that is extremely useful instrument that allows us to de-risk the local banks to do more for smallholders. The other way we try to reach smallholders is through intermediaries, but not the ones that you mean, but the intermediaries like companies that work with smallholder farms, that buy products from smallholders farms, and to stimulate them to take responsibility for their supply chain, for their suppliers. By giving not just financing, but also education, knowledge, expertise, how to apply fertilizers, what you can do to increase your productivity without damaging the environment. So those are a couple of ways that we try to reach the smallholders. Cooperations, and next to me is Elizabeth is a very good example of what smallholder farmers should be doing: unite. Because the more smallholders unite, they can benefit together from buying goods together, selling goods together, but also attracting finance together. So I'm really happy with farmer organizations like Elizabeth is leading in East Africa, and cooperatives, because that allows us to do more for smallholder farms.
Great, thanks a lot, Peter Nell. Let me turn to one of our panelists who is online, and also check that Sophie de Koenig is not online, just because, you know, there's a lot happening here in COP28, and then we may have missed the in-person versus... Sophie, are you online? Sophie de Koenig... very important player who knows a lot and has studied for decades how to support smallholder farmers and climate adaptation on the ground. Alejandro, what can you add to this issue, identifying the key bottlenecks for public-private investment really being used for adaptation of smallholder farmers? Press online and you have the floor.
Thank you. Can you hear me?
Yes, we can very well.
Great, excellent, thank you. Hi everybody, sorry I'm not there with you, and thank you to the other panelists. I'm gonna provide maybe a slightly different perspective or perhaps complementary to what the other panelists have mentioned. And maybe my first point is I'd like to talk about, I understand why we're talking mostly about smallholders, but I'd like to invite us to think a bit more broadly about other food system actors who are also trying to adapt. In retail, in wholesale, intermediaries, cooks, so all the gamut, because there's thousands, hundreds of thousands of jobs there at stake as well. The other point I'd like to say is I like the language of resilience and building resilience rather than adaptation because I think it's more active. So I'm going to use that language. Um, maybe my I I have the liberty to say to speak how I do because I'm a researcher, so I'm not invested in any specific organization dealing with investments or I'm not lending, so I can kind of speak a little bit more from the outside. Um, my sense is that we're missing a little bit of the picture, and I'd like to shed a little bit of light there, which is around all the informal sector, and by that I mean the very small scale, uh, usually family-run um, organizations and small enterprises that are really driving the food system in Africa. And I think there's this perception and rightly so, perhaps, that this sector is kind of uninvestable, or that is very difficult to get down there. Um, the the but I think we need to maybe I have a slightly more optimistic view. Obviously, there's barriers to getting there, and my colleagues have mentioned some of them. It's small scale. It's operating often outside the radar. It's not organized, so it's very difficult for finance to get down there. But I think so. People are not waiting to adapt. People are not waiting for a bank to give them money to adapt. I think people are adapting all the time, and people are building their resilience all the time. And there are financial flows all the time, either value chain finance from informal lenders, or there's saving groups, or there's people are doing all sorts of things to adapt. And so I think my what I'd like to say is we're we're we have one type of finance in mind, but I think there's lots of ways in which finance is circulating through this system all the time. So yes, I recognize the barriers. It's small scale, it's difficult, but there's already a lot of stuff happening in there that can be supported, and that is helping people deal with climate change. I will come to what I think are some of the answers in the later round, but I just wanted to maybe like put that on the table as a sector. Oops, sorry, I was reminding me to shut up after 3 minutes. Um, I think that I just wanted to put on the table that sector, what is already going on in that sector, the goods and services that are already provided by that sector, the enormous resilience that that sector has shown, particularly during COVID. I think is a good example of how the informal sector really stepped up to continue to deliver food in the face of this enormous challenge. And that perhaps what we need to think out is how we work with that informal sector to continue to deliver those goods and to continue to work in the rather support the things that already work and try to fix the things that don't. Like I said, I'll try to get to some ideas about how that might be done on the second round. So back to you, Francesco.
Thanks so much, Alejandro. And he just showed you the value, in fact, of working with IIED because they really know the food systems. And thanks for reminding us that it is all very complex, and certainly farmers are crucial, but they are not the only one. We know, in fact, that many farmers all over the world and in Africa have off-farm activities themselves as part of their family-run business, often informal. So that's very crucial to remember that we're talking about whole value chains, all territories, and not only one type of actors, and also that so much happens. Adaptation happens, finance happens, but we need to make maybe the link between the two. So last but absolutely not least panelist, let's maybe turn now to kind of a public sector perspective. Thanks for the panelists to be self-managing the stage and to get Alejandro's video running well in front of the audience. So now Timo Gesbesk is a senior policy officer exactly on working on food security at the Ministry of Foreign Affairs in the Netherlands, a crucial donor, a crucial actor on the international stage on all these topics. So how do you see that, Timo, from your perspective? What else can you add on what are the obstacles to public-private working together in terms of investment? Please, Timo.
Thank you very much. Thank you for the invitation to participate here today also. I think one key thing is that smallholder farmers are private, but often not commercial. And we think they are. A lot of farmers sell produce on the market, but a lot of the money that is brought in is to meet immediate household needs and partly to buy other food. So a surplus for profit is a completely different ballgame. A limited part of farmers have enough land and enough resources to produce a commercial surplus that they actually make their money off. And the issue with that is that the business case needs to really work for farmers to be able to invest, and the level of investment that many farmers can make is extremely limited, and I think that is often underestimated. I was in Rwanda where a lot of discussion was about investments of $1,000 per farmer, which from the Netherlands perspective sounds like manageable, but if a farming family earns $50 a month, that's a challenge. And just the repayment or the maintenance of those things is often unaffordable. So the things that investors offer to farmers need to match with what farmers can actually handle. And if there's a mismatch, we can talk about it all we want, but it's not going to reach scale. Another big thing is that if you look at climate change patterns that are already happening, the biggest change that I think is there is that our rain showers are getting more intensive. So what used to fall in 6 hours now falls in 4 hours, and the consequence is that more water runs off and less water goes into the ground. I looked at rainfall data for Kenya and Uganda. The number of dry spells has not increased in the last 40 years, but the impact is much bigger because the soils don't get as wet anymore. And what you need to do to invest in keeping your soils humid is not something that costs money, but it costs time. So there's, how do we make sure that we do the things that make sense for a farmer to reduce their vulnerability is a change. Now the big picture is, if you look at the latest IPCC report, the global food productivity is going to decline faster than we can compensate for with adaptation. And that means we're looking at an increasing problem with food production. The only way we can solve that is by looking at the balance between food, animal feed, and biofuel. And because they compete for land, and we don't have much more land available if we don't want to get into the forests. There is room for investment, because then we're talking about big companies with big cash volumes, and maybe there's interest in transitioning from feed or biofuel back to food, but the profitability is less, and I think that's a challenge. But that's a discussion where I think we need to have it, because our global food trade that also a lot of smallholder farmers depend on, some of them buy some of their staples on the market, is getting more and more volatile, and if we want to reduce that, this is a thing that we need to discuss as well.
Pass it back to Vandana, but fantastic points also from Timo on this very big picture on food, feed, and biofuel, and also thanks for reminding us the issue of ticket size, of the type of investments you can do. We have heard this week, this past 10 days, hundreds of millions of billions sometimes being pledged. There is a willingness to spend resources to support smallholder and other value chain players. But how can you move from such amounts to the manageable amount of resources that actually a family farming system can handle? And that's another crucial element, and the banking sector, both public and private, should think about that. Now, let me ask Vandana then, what kind of partnerships are needed to develop this really bankable adaptation projects? What kind of probably also institutional innovation we need to create a real partnership between the public and the private sector now that we move into discussing solutions? Vandana, what have you learned, and you can say that in terms of partnerships need to change now to make this all happen and flow better?
Thank you. So we were talking about the barriers, right? And for each of the barriers that we have spoken here, I think we need different types of partnerships to address those barriers. So, for example, like when we talk about bringing adaptation finance into countries, we definitely need the policies. We understand that. We say, okay, all the governments come up with a national adaptation policy. it is great at the national level, but how does that then trickle down to implementation at the grassroots level? One example. So what kind of partnerships then are needed to get that done, right? An example I would quote is like if you have the Ministry of Roads coming and laying a road today, then the Ministry of ICT coming and digging up the side to put up a broadband line, and then the Ministry of Electricity comes, puts up a pole, then the Ministry of Irrigation comes and puts up another drainage pipe somewhere. And by the end of the week, like most probably the road doesn't exist anymore. So similarly, if you do not have coordination and partnerships at ministerial level, for example, and interdepartmental levels, at agriculture, energy, water, finance, and treasury, we are missing out. Even health and education at the community level, at the local levels, those adaptations, I mean, that is very important. So that's public involvement and all the actors around it, including NGOs, of course. Then when we talked about ticket sizes and the barriers in different sections, let's say if somebody needs to provide finance of $20,000 to $250,000, like which kind of incubators are out there in the market who can provide that kind of finance? If we have accelerators after that, like maybe 250,000 to a million or so, and a million and above, and you know, the different ticket sizes require different types of actors, like especially even investors, but also the capacity development services providers, right? Because we also spoke about how financial institutions themselves do not have the capacity to most probably understand climate finance and bring it to the to farmers. The bankers say, yeah, see, we are bankers, we are not climate experts. So then there is an expertise gap that also needs to be filled, and we need partnerships to bridge those gaps, right? So yeah, partnerships come in different elements. But one important point that I would bring is, as much as these are different organizations, we shouldn't forget the people link, or the interconnectedness of individuals working in all these institutions, right? It's not partnerships between brands. It is about individuals in these institutions who need the capacities, who need to keep the dialogue going and things like that. So we need to foster that kind of collaboration at the people level. Thank you.
Thanks so much. Thanks so much for these great points, Vandana. Elizabeth, what's your take on the type of partnerships? You have clearly already said that Eastern African Farmers Federation has moved into that type of business mentality. What do we need in terms of partnerships and maybe new type of partnership for real public-private spending together for the adaptation of local food systems? What recommendations?
Yeah, thank you. I wanted to just use half a minute maybe to first make some quick reflections on the comments that previously came from my colleagues, which I felt I needed to maybe just add one or two things. I think on the issue of farmers' organizations being small, a comment that came from my colleagues, that we are small. Of course, our sector is subsistence in nature. Our production is also small. And then how to, work with us becomes a challenge. I just wanted to give them comfort that we are organized in farmers associations, in cooperatives, and under the concept of aggregation, because we also acknowledge that challenge and we are trying to aggregate ourselves, so that instead of having to deal with 1,000 members, for example, we are looking at 1,000 tons of, let's say, production. So for us, it's more, aggregation is more at production than the individuals in those cooperatives. And then the second point is from my sister, where she mentioned that they're supporting local banks to be able to be channels to provide financing to, let's say, smallholder farmers. I think the challenge is that most of the local banks also don't really understand agriculture. When you look at their lending portfolio to the agriculture sector, it's less than 5%. And their cost of credit is high, over 18%. So there's no reason why a commercial bank, whose main objective or main vision is to make profit, should actually lend your money at a lower rate when they actually have their own money, which they're supposed to lend at a high rate, and it brings in more returns. So I think that is where the challenge is, and we need maybe to work out an arrangement where we have more agriculture-leaning institutions that can receive that kind of funding that really understands farmers. But the way the landscape is now, it is not really pro-farmers, and that's why farmers are not able to access that kind of financing. So in terms of the partnerships that we need, I think there are key ingredients that we really need to look at when building such kind of partnerships. And one of them is trust. And I'm also looking at, institutions that really have a common vision, that have a common goal to achieve. And they should be, there should be a holistic approach where we are bringing different, actors coming together that are in the food systems across the entire value chain. And within those partnerships, we need to see equity and respect for the different partners. And that's why we are saying as smallholder farmers, we need to be treated as equal partners, because there's also something that we are bringing on the table. And there's a lot of investments that we are already making to the sector. I thought I would hear from Alejandro from IIED, because I know there's a study that they conducted together with Forest Farm Facility that is giving us some snapshot of the kind of investments that the smallholder farmers are making to the already in climate action, over 368, I think, billion, US dollars investment that the smallholder farmers are already making. And that is not a small or a main investment because collectively we are the biggest private sector, and I don't think there's any private sector that has really made that kind of investment to the sector. So we really need to see a partnership that is balanced, that is fair, that is, that has equity and respects every partner, and every partner is contributing to the partnership, but also benefiting from the partnership. Then maybe lastly, we need to really expand the agriculture accredited entities. Because currently most of the financing go through banks. They're the ones that are mostly accredited entities to receive financing. And those commercial institutions, like I said, they have limited capacity. So we need to have some sort of technical assistance facility that can as well, support some of these institutions to be able to lend to smallholder farmers and the agriculture sector in general, or maybe propose an alternative accreditation mechanism where we have so many institutions being accredited to, to be able to support farmers. Thank you.
Very much, Elizabeth. You are showing that sometimes indeed farmers are perceived to be not on top of some of these issues, but if you hear what Elizabeth is saying, you show that you have understood exactly what happens from the global level to the finance level. It's great to hear this centrality and your thinking on all of the aspects from governance to finance. Let me turn to Peter-Nel again. Peter-Nel, you handle investments, so at the local level, what needs to happen for the ecosystem? What you suggest needs to happen for you and others to work better with the local financial markets? Maybe you can give us suggestions.
Yeah, I think what I would like to emphasize is also the role of local governments in various ways. If you know that worldwide, the agricultural food production is subsidized with, I think, 700 billion, I even heard 800 billion. And that is not happening in Africa at the moment. That's happening in other parts of the world. So if you want to stimulate agricultural production, subsidies are really a great stimulus. That's one. But if you don't have the resources to do that, that is also often the case, then there's other ways. If you look at India, if you look at Kenya, the governments have really are stimulating banks to do more in the agricultural sector and in rural areas. For instance, Equity Bank, which is a Kenyan bank, one of our clients as well, they're aiming to have 30% of their portfolio in smallholder farms or farming. And they're building up the expertise because you're right, not all banks know what it means to finance agriculture and smallholders. So I think we cannot do it alone from the private sector. We need also the public side to help in this, and they can be a great force for change.
Great points, also Peter Nell. And now back to Alejandro. You already said you had a number of... Thanks for moving. A number of suggestions, Alejandro. Can you please come in with your recommendation on what partnerships are needed to develop resilience finance, as you call it, on the ground? Please, Alejandro.
Absolutely, Francesco. Thank you very much. And thanks, Elizabeth, for your shout out to the work of my colleague shouting on smallholder finance, which I think drives the point exactly that I was trying to make, which is farmers and other actors are not just waiting to get the loan. They are adapting all the time and they're investing of their own funds to do so. I'd like to make maybe just two very quick points, and that is to say three quick points. One is, I think that there is, like I said, there's already finance going on, and there's already adaptation going on. We talked about the barriers of working with this small-scale informal sector, as I mentioned. I think the solution cannot be to wait until all of it is formalized, which is often what many of the financial institutions say. Well, first you have to formalize, then we can talk. I think we need to work with the world as it exists, not as we want it to be. And so my three thoughts here are: how do we kind of grapple with this informality in the food systems, and how do we get some of that money where it's needed? And part of the problem, I think, is this kind of project mentality of kind of like burning through money. As you said, Francesco, there's like hundreds of billions of dollars pledged, and so there's this idea that we need to like burn through money in these projects to get it to the farmers. Let me outline three quick things. One is, I think we need to have a discussion about public goods and investing in public goods, because often what is needed is not some other project on some other value chain, but instead investing in the infrastructure that makes all farmers and all food system sector a bit better off. Roads, market infrastructure, facilities, sanitation, communication. So these don't distinguish between formal and informal. They benefit everybody, but particularly the poor. So I think we need to go beyond this idea that we need some extra project on some other new crop, some fancy new crop, and then invest in the basic things that have been shown to work. The second one is, like I said, there's already lots in the informal sector, and by this I mean in intermediaries, wholesalers, microprocessors, the people selling food in the streets. There's already a lot going on there. And I think we first need to, instead of rushing with an agenda of like, here's how we need to give you more money to do this or that, I think we need to start from the ground up, thinking what is already working here. Like I said, COVID was a really good demonstration that there is a lot of resilience built into this sector. So I would first recognize the importance of this informal sector and then engage with them rather than sideline them, and rather than say, like some other of my panelists said, you're too small to have a conversation with us. Well, actually, let's have a talk about what you need first before thinking about how big you are. And then maybe try to think of those investments based on what the actual needs are on the ground. The third thing I wanted to say, which is more of like, let's say, the delivery or the mechanics, I think we're in an unprecedented moment and a revolution really in terms of being able to give money to people. And it's not a small thing. Farmers all over the world now, particularly in Africa, have mobile technology, and you can give money to people. So that used to be a big obstacle to accessing those very, very small holders or the very small entrepreneurs. And that, I think, the ability to put money in people's pockets is really, really important, really revolutionizing, not just for lending, which is already happening, but also for delivering of social protection, cash transfers. Putting cash in people's money is has been shown to be the most important thing for people to get out of poverty and to adapt. So I think that we need to get we need to get money in people's pockets, and we have the way to do it. I wanted to end, if I have another 30 seconds, Francesco, just to say that I recently visited India for a project we're doing, where there was a very nice alliance between Primark, who's buying cotton from women in Gujarat, and SEWA, which is the Self-Employed Women Association, where SEWA and members had created this resilience fund to help their farmers adapt. And Primark is just kind of helping invest in that fund. But for the women, when we were talking to them, what was good about this is that it was very easy. They got the payments really quickly. It responded to the needs they had right then and there. They didn't have to wait to create some new project. And so I think this idea of funds, of resilience funds that are blended finance, perhaps, because there can be donors, there can be government, but are really managed by the women themselves and that deliver very quickly to what they need. I think that's a really promising area that I think can get, like I said, people money in people's pockets. And with that, I will pass it on. Thank you very much.
Thanks so much, Alejandro. Thanks for the panelists to get back to their finally to their seats. And thanks, Alejandro, for reminding us that about the governance aspects and that a lot of that innovation needed to serve really the key actors, including informal, is already happening, and there are a lot of ideas and examples out there. Timo, what more can we add on what type of partnerships or even local conditions are needed to make the type of examples Alejandro mentioned upscaled, maybe, if you want?
I don't know if I have that many anymore because so much has been said already. One observation, cooperatives were mentioned, farmer groups were mentioned. I think they are crucial because they can bring things together. And the cooperatives that I've seen over the last few years, among others visiting one of the S&V projects, they had one bottleneck. That was their working capital to buy up the produce after the harvest and then sell it in the market. It's a simple thing. It's not an investment in technology or whatever, but it's just making working capital available so that the cooperative can buy the stuff that is there from the farmers, that the farmers want to sell it, and then repay the loan and repay the farmers. There, I think a lot of the discussion on finance is about technologies, and maybe this is something we can look at. I visited a coffee cooperative in Congo, which could buy up only a quarter of the coffee that the farmers produced because they just did not have the cash flow. But the coffee was there, and the farmers were very happy to sell it to the cooperative. Now they were selling it to others in their own ways for different prices. I think if that happens, because with the aggregation you get you get quality monitoring, people invest in their quality, then people will start in improving their practices as well, if they know the stuff is being procured. So I think that will trigger a lot of investment by farmers down the road, and sometimes maybe we start on the wrong side of the chain.
Excellent point. In fact, Timo, sometimes things are more basic and simple than we think, and what you hear in these mega announcements, innovation, global funds of billions for super new technological improvements, and then we don't think at the very basics like cooperatives and how they can actually handle the minimum amount of cash flow. There's a lot to be done there. Let me, of course, take a few minutes to see if anyone here has any question for our important panelists. I pass the mic around.
Thank you so much. Good morning. I am Fatma Al-Hassan, National Convener of Sudan. I took some key words from the panelists. First, Alejandro talking about resilience to climate change and resilience finance. Then my sister from East Africa about cooperatives, about partnership. So we have very big knowledge, endogenous knowledge for farmers. But how, there is a question, how we can develop this knowledge? Because sometimes they have knowledge more than the specialist in production and in agriculture. We have also to make use of the best practices. For example, in Sudan, we have an FAO project mainly targeting the climate change affected areas. Believe me that productivity increased by some research results increased from 2 sacks 90 kg to more than 10 and 12 with a very, very short knowledge and research results. Also, how we can finance the research and how we can utilize these research results for conducive food system and adaptation and also resilience. Please focus on resilience more, and adaptation is very good, but also. Sorry, take time because, yeah. By the way, also link between food system and finance in all plans, policies, and strategies, and integrated intervention. Not only climate projects and food projects. We have to have an integrated, and thank you so much.
Thanks so much. If you can pass the thanks for this point, and it's crucial to have a national convener here. Thanks so much for coming. I wish many more national conveners were here to hear the fantastic points made. Please, sir.
Thank you very much. Just to say that I'm also happy to be part of this early morning session. Let me first of all say that we as small scale or smallholder farmers, we are not small because we are the biggest employers.
Where are you from?
I'm from the Gambia. I'm Musa Sow. I'm a farmer and a farmer leader. Just a reminder that we are the biggest employers in the world, so we cannot be considered small. In fact, the food we eat, the one who produces the food, cannot also be small. I mean, I think we basically are partners in development. What I totally agree with is the intervention of Elizabeth, where she said that some commercial banks or private sector also have limited capacity to understand what the farmers are and what the farmers can do. And then the fact that they have limited knowledge, they have very little knowledge also how to de-risk the loans that they provide. You see, the risking the loans would require how do they also partner with insurance companies to also start insuring our products. Climate change, we all know, is real, and then there's no way we can have a solution to that now. But then I think it is important that the private sector comes in with a very clear knowledge of how do they come in. They need to really have that. It's not just a matter of, yes, I have the money, and then I could give the money. But my questions to her is, she said they have money, and then they want to go to the private sector to get to the farmers. You know quite well that the private sector would require some conditions that the farmers cannot meet, be it in the form of collateral, be it in the form of interest rates, high interest rates. It becomes very, very tough. Again, using these funds goes through the private sector. I'm asking a question that is, if these conditions are already known to be true, the collateral and also the high interest rates, what would be the approach from the funders, the funds that they have, to make sure that these two challenges are managed and farmers are also have access to finance? And the other aspect is for the fact that...
Sorry, sir, for the sake of time, can you...
Just the last one.
Yeah.
The other aspect also is for the fact that we continue do our production based on rain-fed. It's also making it very, very difficult. You see, if investments are geared towards irrigation, that also would de-risk the risks that are perceived by private sector.
Thank you.
So, thank you.
One last question, and then we get some reaction.
Thank
you.
Be
quick, please, madam.
Yeah, no, not a problem. My name is Ree from Africa Union Commission. Thank you for the wonderful talk and the different points made. Just two quick things. The first is, based on what's been said and some of the questions that have been raised, can we not look at more innovative financing solutions for the smallholder farmers in Africa? Because I do think there is quite a lot that we possess in Africa, including livestock, which I think can be used as securitizable assets, and you see how that can be integrated within a farming system. The second thing is there's issues around governance, especially at community level with farmers, etc., which sometimes hinders the ability for somebody to actually come in and invest. And I just wanted to see, for the farmer associations that are working, how are you tackling the governance issues? Thank you.
Well, fantastic questions. So I don't think, very quick comment from each of you, and you can answer either to the question on how to bring up indigenous knowledge more to the finance world, the question on insurance and connect it better to the needs of the farmers, and the last very crucial point also on governance. Please, Elizabeth.
Okay, yeah, to start with, so many good things are happening on the continent, but they are small and they are scattered. I think we need to consolidate them, profile them, and see how we can invest in scaling them. On the issue of governance, as farmers' organizations, we've invested in capacity training. We normally have, of course, training is continuous. So every time we have new leaders on board, we normally make sure that they are trained in understanding the whole aspect of governance. So right from the grassroots, that's why we are able to generate leaders up to our level and the continental level. So I think governance is not an issue. And in some cases, it's personalities. I mean, you can't take it general. At times, maybe it's one leader who is not delivering. Yeah, but as long as the members understand their mandate, then they are able to manage the issue of governance, because power is in the hands of the members. And then on the issue of financing, I also had a point, maybe a question to my sister here. As farmers' organizations, we've also invested a lot in professional financial management systems, and we've been able to manage big grants from even big donors, World Bank, the EU, IFAD, FAO, and other institutions. So is there a possibility of trying out maybe a pilot financing a model with the farmers, because we've been able to manage such big funds. And I think we've built our own internal capacity to be able to manage such kind of funds. So can we have it maybe as a trial where farm organizations can receive direct funding? I think that would be a good idea, and it would help in addressing all these issues of intermediaries and the challenges that we are getting with them. Thank you.
Who else would like to react to the questions? You don't have to, eh? Please, Peter Nell.
Elizabeth answers, yes, of course, we can talk about that. No issue. But maybe to comment on the remark that access to finance is a challenge. And let me see, Alejandro mentioned that there's a big part of an informal sector, there's a big informal part in the agricultural sector. The problem is the financial sector is the most formal sector in the world. It's more formal than governments because everybody wants to make sure that every dollar or euro or local currency that goes out out properly to the right individuals, right companies, and so on. That is what we're running up against. So how do we match this formal, to release the funds from a formal system to a more informal and often very well organized, and how to, that is the bridge we're trying to gap. And that's the gap we're trying to bridge. That's the way I should say it.
Thanks so much. Alejandro, maybe, do you have, without you moving, don't worry, Alejandro, bear with us here, but the point the national convener from South Sudan was making, how do we bring making much more the evidence and the knowledge already there, like you also mentioned yourself, how do we bring it more to those who make the investments? Do you have an answer to our Sudan?
Yeah, thank you. We just need to go and look, we just need to go and talk to people. We can't figure this out from the offices in The Hague or in London. We need to go and talk to people. I think a lot of organizations are doing that. Actually, I think there's progress on this, but I think we need more of that, and we need to co-design these investments. We need to co-create them with the communities. We need to figure out what they want and what works for them before we come up with solutions. But I'm encouraged that I think we're moving towards that. I think we just need to move more quickly towards that.
Thanks so much, Alejandro. Please, Vandana.
There's a lot of work that is already happening in financing smallholder farmers, but through partners like, I'll give an example in Kenya itself called Cusco. The Kenya Union of SACCO members are mostly farmers. They have, so there was one particular product called the Smart Water for Agriculture loan product that was developed way back in 2017, 2018. But the implementation, the adaptation part of it is always about the change in behaviors, change in sociocultural norms and sometimes, and things like that. So it's a long process. So I think there are lots of already pilots. I think there's an exhaustion of pilots also. We are looking at some point to scale these pilots. And this is where we need to work more collaboratively in scaling that. Yeah, thank you.
Thank you, Vandana. Maybe the last point from Timo reacting on the issue here asked on irrigation. Please.
Thank you. Yes, I'm actually an irrigation engineer by training, and I hear that a lot. Oh, if we do more irrigation, we can solve the problem. But you can only irrigate if there's water. My conviction now, even though I'm an irrigation engineer, is it is an option of last resort because it's expensive, and we often end up growing crops with it that don't actually yield enough profit to be able to repay it. What we really need to invest in is in soil moisture management and soil health. That is the challenge that we see in soils all over Africa, that we see degradation, we lose our organic matter, we lose a lot of quality in the soil, and with that, it becomes more vulnerable to dry spells, it becomes more vulnerable well, the whole system becomes more vulnerable. That's the thing we need to invest in at scale, but a lot of that doesn't cost money, it just needs talking to people about how we're going to organize this.
Thanks so much. Thanks so much to all of the panelists and to the audience for the questions. We could go on forever, but unfortunately we don't have a lot of time. I cannot ever try to summarize the fantastic points made by the panelists. At ECDPM we are writing a paper soon about local ecosystems for enhanced PPPs for adaptation, and I wish my colleague online who's going to lead this has just taken good notes, because you have written our paper. This is a fantastic example of, also this is not a talk shop. When ECDPM SMB organize these things is to build partnerships to move forward. So let's keep in touch, all of you. I wish you guys would be the advisors of those who have pledged in the last 10 days the 100 or millions, because you have told us actually how to make those resources reach local food systems, especially for resilience. So we have learned a lot. We have learned that there's already so much information out there and knowledge on how to do things. You need to connect those, for example, from Africa, for those who decide the finance, but also the crucial point Peter Nell was making. Finance is a formal business, so we cannot dream suddenly of these things happening. But that's the important point that also Alejandro was making. Knowledge is there, we need to collect it, and that's why some of us can play that role. So in that, we need to turn research from just collecting information to information that is formal, that indicators, assessments of risk. We need to turn all of the things we hear today and in our work into the financial sector so they can use the better information for better finance planning. That's maybe the link some of us here in the Food Systems Pavilion can make. We heard a lot of important things already happening from Vandana and others and Elizabeth on actual financial innovation. If you talk to Elizabeth, she can tell you exactly, she had suggestion on basically a financial architecture reform that makes farmers access directly the funding, accrediting all these mega funds like the Green Climate Fund. It cannot be only a government institution. You need to make the farmers and the other value chain actors directly working with the agencies that are accredited to get the money. So there's quite a lot of important points we heard about financial, if you want, architecture reform. And governance, we've talked a lot about governance, about the excellent work already farmers are doing to work better together, to interact with the aggregators who are formal. So this knowledge, financial reform, governance reform are happening. I think what we can do moving forward is connecting these fantastic points with the entry points. A lot is going to happen in the coming year and more about making all of this better. Yesterday, the FAO just announced that they have a roadmap to formalize the information on how you can bring together climate and food objectives, and they want to use it to support countries like Sudan and others to really plan properly and to transform evidence on trade-offs, on what's going to happen, scenario building, into actual possibility to convince investors to invest. So there's next year there's going to be another COP. We're going to have Malabo 2.0. The African Union is leading an exercise to make sure to write together the climate and the food plans. There is a lot of policy, international entry points. We need to connect the knowledge and fantastic points our panelists made to those who are willing to help, but maybe they don't know all of the details. So it's fantastic what we have heard today. Let's keep in touch, let's keep working together, and you have heard today, things are happening. Thanks, Alejandro, for reminding us to be optimists, and then we can all work together to improve the food systems and in particular its resilience. Thanks a lot, to the next time. Thanks again for the panelists.